Hey guys, this is Ken McElroy, and you are listening to the Mailbox Money Show with Bronson Hill.
All right, welcome to the Mailbox Money Show. My name is Bronson Hill. Excited that you are here joining us today. We have an awesome topic today about coffee farms, investing in coffee in South America, which is primarily a big place where a lot of coffee in the U.S. comes from. And I've heard about this before. You can own different whether it's coffee or it's chocolate or other sorts of farms in Central South America. And you get not only the cash flow from it, you also get sometimes to actually enjoy some of the coffee or the chocolate or have some other benefits as well. So here to talk with me today, I've got Cole Shephard, who's with Legacy Group. Cole, welcome. How are you today?
Doing great, Bronson. Thanks for having me.
Hey, really excited to have you, man. And I know you're in the coffee business. A lot of people, they say, the world runs on coffee. And even in, times of recession or depression, people spend more on things like coffee and other sort of things that are the essential luxuries, that
Sure.
Starbucks becomes $6 or whatever it costs to buy a cup of coffee. But why don't you give us a little bit of your background? Tell us how you got started with coffee.
Sure. So background was outside of university. I went to NC State University, both grad and undergrad. Started with PwC out of school. I started getting the international vibe when I was about 25, moved to Bermuda with PwC. After a couple years in financial services, moved to the M&A side of the firm within Hong Kong. So I lived between Beijing and Hong Kong for about 4 years. Came down to Colombia, saw some opportunity. So I ended up leaving the firm when I was about 31 years old. Making big bets on myself. You liquidate all your IRAs or your 401ks, make a bet, start becoming an entrepreneur. Got into mostly flipping real estate and commodity trading, primarily in the fresh cut flower space down here in Colombia. I had a unique skill set of having Asian connections, doing the fact that I was spending my time between Hong Kong and Beijing. And got into the commodity trading space. We got into coffee within that. We looked at coffee and cacao. Came across an investment group that was looking for something outside commercial real estate, comfortable with risk profile of Colombia. And we created the coffee company that now has grown from a $6 million kind of a venture capital almost backed firm, kind of a blueprint. And in the last 5 years, we've become the largest consolidated producer of coffee in the country. So kind of going from nothing into the biggest player of the national product of the country.
Now, let's talk about that for a bit, because again, obviously you have a lot of international experience. You've worked in other places, consulting and all different things in Asia and whatever. So when you say in Colombia, obviously there's some of the environmental factors, meaning, you can grow coffee really well there. But that sounds really impressive to grow something to where how many pounds of beans is that a year you guys are growing now?
We do millions of pounds. So
Wow.
this year we should do about 10 million pounds of coffee.
10 million pounds of coffee. That's amazing. So you're the number one grower of coffee. Okay. So it's gone from just being an idea to, and how many years was that from idea to where it is now?
Had the idea in 2017, did the cap raise starting the end of 2017, deployed capital in 2018. Okay. So been going about 5 years now. So it's been a rapid, aggressive 5-year growth, but I wouldn't change it for the world. It's been a great ride.
And how did you identify? Did you just say, okay, this seems right because of the environment, the economic environment in Colombia, because of kind of the I guess the economics there, as well as some of the different factors that went into it? What made Colombia better than other kind of neighboring countries?
Sure. So that kind of from a macroeconomic perspective, I had a little bit of an advantage since that was kind of my background at PwC. My background was buying banks, insurance companies, asset managers. So structuring a private equity project was in a kind of outside of my skill set. It was kind of like a corollary path to go. What I saw when I came down to Colombia was an untapped banking market. Lending was very tight, very underpenetrated. And so that creates a lot of anomalies in pricing, both within real estate and things like farmland, agriculture. When you don't have access, especially to debt capital, valuations are whatever they're going to be. The access to human capital, usually you have flight outside of the country. And so what we saw is a very kind of deconsolidated market in coffee. And we saw that if we brought, international capital in and international talent, there's room to play. And, the original thesis really was just to compete with commercial real estate kind of on a yield out kind of basis. But when we got started and really got into get into the coffee game here in Colombia, we saw that if we invest more capital, significantly more capital, buy better management teams, and really take it, super serious like an enterprise, we got a real play here, right? And so what we're trying to do is build pre-IPO companies, and I think we're one of the only sponsors doing that down here in Colombia.
You mentioned before you have multiple companies. A lot of people that I know that have the skill set of M&A, they're able to just come into a business and it's the same thing. It's a rinse and repeat. You find numbers that make sense. They always say, even in real estate, don't fall in love with the deal, fall in love with the numbers. And when the numbers are telling you things, and of course, I think that's a skill set that I really admire. And I think for a lot of passive investors like what we have, it's a lot of, being able to analyze a deal. And it doesn't really matter if it's a multifamily deal, if it's an ATM machine deal, a car wash deal, or whatever, just being able to have that skill set to look at a deal, look at, okay, these are the known risks, these are things that could be risks, and just being able to kind of evaluate all that. How do you think that skill set's really enabled you to become successful in what you're doing now?
Oh, it was vital. It's vital. I always tell people, my time at PwC was definitely like my PhD in business. So nowadays I sit on acquisitions when we do, agriculture acquisitions, maybe the biggest deals we might look at for a land acquisition, maybe $5-10 million. But if I turn back the clock 10 years, I was involved with banking, insurance deals that were I think my biggest deal I ever did was an insurance deal that's about $8 billion US dollars in out of Hong Kong. And so but the talent pool and the kind of the things that you analyze are exactly the same. How you analyze financial statements, how you analyze risk, how you quantify that risk is exactly the same concept. So I tell people, and it's a plug for PwC, but if I hadn't had my experience at PwC, there's no way I could do what I did today. You can't learn it from a book for sure.
So that's a question, I guess. I've had 1,500 one-on-one phone calls with high net worth investors, and I see some of them are very green when it comes to, like, I've done stocks, or I've got a money guy, or somebody who works for a financial advisor. So what's a way somebody who's more of a retail investor can just learn about this kind of stuff?
Sure. I mean, so a good example is all our investors. When we raise capital, it's all high net worth investor capital. If I was going in fresh and I didn't know all these things, always go in as an LP when you're learning. Don't be a GP and take on the responsibility yourself, especially if you don't know the space, right? Especially when you take other people's money as well, if you're acting on other people. But I would say if guys are interested, and I think there's a lot of opportunity out there in the alternative investment space. There's more and more syndication deals coming in every day, whether it's in single asset space or in syndicated real estate portfolio deals, which I think are really, really cool. Kind of diversify your plays around and learn as much as you can from the sponsors. And after you do a few, you'll learn how to diligence them. If you're lucky enough to have like a mentor, that would be the best case. For the guys that are younger, some of the the older investors might not like having a mentor tell them what to do and whatnot, but especially for the younger guys, I mean, you got to have a mentor kind of showing you what you're doing, or you kind of have to wait till some of the bets pay off, or some of them don't pay off. And you might actually learn more from the ones that don't pay off if you go back and analyze, why didn't these pay off? But either way, you're gonna pay to learn for sure.
Well, it's true. I think people can look at you or me and be like, wow, these guys have been doing it for a while. They're just experienced, and I'll never have that kind of experience, whatever. Well, one of the things I learned the most from, kind of to your point, was I lost my biggest loss was $70,000 in one day through an options trading strategy. And this was when my net worth was like 200K, right? So I was like over a third of my net worth.
Sure.
And I learned, I made some money. I made like 20K over a few months, and I ended up losing. So I had a net loss of like 50K over a few months, but it was really painful because I just had felt like I was doing well. But what I really learned is that I'm not a good options trader. I'm not a good guy who's like, some of the people are really good at that. They like follow a strategy. They're like engineers with checklists and like pilots and things like that. That's not my best thing. I like looking at the macro and what can I do? And of course, working with investors and trying to find out, where does the macroeconomic case really make sense, and really get into, it's got to be a no brainer. It's not like you've got to pull a lever at a certain time and all of a sudden this thing works or it doesn't work. But let's talk a little bit more about the coffee business, right? So why don't you just give us a little bit of a structure of kind of how, you guys set this up, or what is it, is when people come in, is this a fund that they come into that's kind of like, there's no end date? Is it more of a certain period of time? Do people have a specific tract of land they own? Like, how does that actually work?
Sure. So what we saw in the market, I mean, kind of the way you intro, Bronson, I think is a great example. Guys are doing a lot of like asset plays. when I see ag space, especially in Latin America, guys are doing like small, tracts of land deals. The issue there is you're never going to get enterprise value out of an asset deal, right? So we like myself and my business partner is a securities attorney, super smart guy. And we structure everything as, multinationals. So we do Delaware LLCs, the typical corporate structure with subs underneath that hold all the assets and all the working capital in Colombia. Right. So what we're doing is we're setting up a company for a corporate sale or for an IPO in the United States. Right. That's what we're setting up. And what you want to do is sell an entire enterprise. So if a new investor comes in and invests with us, they're investing in shares in a Delaware LLC. We don't do like specific asset plays because I think it tears away basic enterprise value. What we're trying to do is create an ecosystem of value. And really the best way to do that is a company structure.
Yeah, exactly. Yeah, and it makes sense because a lot of businesses, if somebody like has a car wash, like it trades at a certain earning, maybe 8 or 10 times earnings, but you have 50 car washes, it trades, 20, 30 times earnings. So it makes sense that versus somebody, I mean, there is an advantage to be like, okay, that plot of land is mine. That coffee farm is mine. Like, I guess that's a benefit there. But also you don't get the scale because a lot of times people, when you sell an enterprise, it just trades at a much higher multiple. And that's why I think people don't really get. So, I know coffee is a commodity as well. So it goes up, it goes down, just as oil and other things, natural gas, these kind of things go up and down. So what are some kind of, is it seasonality, just the stock that's available at the time? Like, what are some things that affect the price of coffee?
Sure. So it's, first of all, for any listener on here that doesn't know about, commodity trading or about coffee, coffee is the most liquid commodity on earth outside of petroleum products. So if you look at what are the most tradable products, you're going to have your petroleum products and you're going to have coffee right underneath. So, if our trading team has a whole container ship full of coffee, you can offload it in like 15 minutes, as long as the price is right to global commodity houses. It's super, super liquid. So going into the pricing of commodities, like it goes into obviously trading styles, what happens with traditional supply and demand, which would be your like typical markets, cycles. Really the largest player in the world in coffee is Brazil. About 50% of the world's coffee comes from there. Colombia is number 3 in the world, but number 2 in Arabica coffees. So there's 2 major types of coffees in the world. One is Robusta, which is higher caffeine, lower, quality profile. It's probably not what you'd want to drink straight. And Arabica is probably what you'll drink at your nice coffee shops in the US. And Colombia is the second largest producer of Arabica coffee in the world. What really trades? I mean, one thing you'd say is supply and demand. What's the production cycle? How much is current inventory on hand? What's the burn down from, people drinking coffee, using it, consuming? But the other thing is paper derivatives. People that run, let's say, hedge funds around paper derivatives, they can smack pricing really quick. So whether it's going up or down, usually the large commodity houses in the world, they'll do a mixture of physical trading plus derivative trading. And you can control markets quite quickly with paper trades. So not everything in commodity world, especially in coffee, is based purely on supply and demand. Somebody grows this much coffee and sells it. Some of it is determined by traders, paper derivative traders. Yeah.
Yeah, it's interesting. Yeah, that's they got the financial markets, which affect things, more than sometimes even the seasonality or other issues that come up. But that's very interesting, and I know you have a good insight into that. What are some of the risks of investing, in coffee? If somebody's like, hey, I've got a net worth of 5 million, I want to put 100K into like this asset. What are some of the risks and kind of things to watch out for?
Sure. So the big things our investors look out for is, one, you always want to tell them the liquidity timeline. What are you shooting for? When we started with an expectation about 10 years hold period. Now we're at kind of, we're shooting for an IPO or sellout in 2026. So 3-4 year period. And really what you want to tell investors, I mean, it's typical to any private equity project that you would invest in, is a limit in liquidity until you have, a transaction event, an exit event, whether it's a corporate sellout or you put it on a public market and you can have liquidity there. I think that is, from an investment risk perspective, that's a big one to make sure, especially investors that are new to alternative investments or new to private deals, how that works, right? So you can't go and offload your position tomorrow and have cash. So make sure it's cash that you have aside, and you're looking to get big returns on that cash. On the commodity market itself, I would say the 2 biggest risks are, what are the commodity trading prices of coffee? If you rely purely on a green trade, For us, we're a vertically integrated play. So we go into kind of the roasted market to kind of hedge out our risk of green. But on a core, I would say on a core coffee basis, you'll never be able to control the C price, no matter how many paper derivatives I trade. I'll never be able to control that amount without a giant amount of cash liquidity. And so it's just not within the parameters. And I would say the other thing you can't really control is weather, right? And so you can hedge risk of weather with, obviously, with derivatives, with insurance contracts, or you just budget for the fact that production can swing. In any agricultural project, you're going to have swings in production. It doesn't matter whether it's coffee, limes, mangoes, whatever. There's going to be times when you're down 20%, you're up 20%. And if you're doing outdoor grows that aren't, within some kind of greenhouse factor where you can completely control climate variables and water variables and everything, you're going to have swings in production. So I'd say those are the two big ones that, investors need to wrap their heads around.
Are there any other, I know when investors come to international investing, obviously there's some more risks I think involved there. One might be property rights or just, I guess there could be some tax issues as well. What are the other issues that are kind of brought up when you invest internationally, or maybe some differences than if you were doing something domestic?
Sure. So our investors, to get excited about international deals. So most of our investors are US high net worth investors, right? When they get presented with alternative investments, typically it's commercial real estate syndicated in the United States, usually single asset or fund-based models. But kind of, vanilla stuff. And that's why they come to us and why they're looking at international deals. But in order to get US-based investors excited about international deals, you got to make up for the risk profile that they'd see investing outside of the United States with enhanced yield, right? Enhanced total returns. What we see within our group, we need to see IRRs, I'd say above 30% to get our investors excited about what you're doing. If you weren't doing, enterprise value plays and potentials for IPOs and value enhancement, if you're just doing like commodity plays, to get to those yield profiles, you'd never be able to do it. So I'd say the biggest things to get people over, I get the hurdle from an international perspective, is one, only investing in one company. You need to have, hedge that risk with return, and just the international nature in general, and get people comfortable over whatever market it is. If it's US-based investors, doesn't matter whether it's Colombia, Egypt, or South Korea, you need to make investors secure that the market, how it behaves, how to mitigate risk, you're able to lay out the risk, country-specific risk, and how to handle whatever's going to come about.
So you guys have been really successful, and it's interesting, picking a commodity and picking an area. It sounds like it was a new area with a new commodity, and just being wildly successful, becoming the largest exporter of coffee in the country. What have been some, obviously there's been, I'm sure, a lot of experience that you've had before, but what are some things that, like, as a company, or things kind of that you've learned along that way that you'd kind of say, hey, these have been some keys to success, or has it been just being in the right macro place? And I'd love to because I think there's a mindset there for investors that, if you're just in the right trend, you just buy in the right place at the right time, no matter what you do, unless you get defrauded, you're going to do well, just because you're like, you're on the tide. It's like you're catching the wave right as it's breaking, right? So don't try to surf when you're not, like, so tell me about that. Tell me about that process.
Sure. I'd say one is be in the right place at the right time, which you can never control. And I think we're in a unique period in Colombia's, history, to where you're seeing, capitalism pick up. We're starting to see a lot of movements in the market, which I think are all preferential for us. We have great FX rates that we can take advantage of and arbitrage with USD investment. But I would say more of a advice on building an emerging and developing company. Human capital by far is more important to me than USD capital. Actually, getting the best and the brightest in emerging markets like Colombia, that can be some of the most challenging things to do. It's not the United States, to where, if your CEO doesn't do well in the US, you might have 17 guys behind him that you can replace him with. What we do is quite specialized in Colombia. And there isn't 17 guys always that can do the job at the level we want them to be at, right? We only hire the best and the brightest international teammates. And I would say human capital is quite difficult when you're in any emerging market. It's actually going to cost you the same as it costs you in a developed market. In the end, when you buy real talent, And just you're always going to have, whatever your jurisdiction that you're operating out of, it's always going to be different probably than what you're used to if it's new to you. And you got to kind of go with the flow, right? So things in Colombia, obviously, they don't work as fast as they would in New York or, my experience in Hong Kong. Hong Kong's like ultra capitalistic, right? Everything is money, everything moves quick. Colombia is not that, right? But the opportunity is here. I mean, no one does what we do here. So you have to trade off the fact that there's massive opportunity with the fact that there's existing bureaucracy. Things take time. It's not the most efficient systems. It's not the most efficient human capital markets. But you got to roll with it. So I guess that's a exercise in patience, I would say, in any new market that you enter.
Yeah, absolutely. It sounds like lots of research and timing and things that are in your control and things that are out of your control. But obviously your experience from other areas has been very valuable. And that's, I think, a lot of application of that when you are an investor, just looking at a team, especially something like this has somebody had experience in other areas they can draw to and they can show. And a lot of times there's a lot of disclaimers around, we have no operating history or things like that that'll be said in the PPM, but you can always look and just see what sort of things people have done before and their reputation as well. Talk to us a little bit about impact investing. What does that mean and why is that important?
Sure. So I would say impact investing, what you're trying to do really is enhance the value of the ecosystem of a business. I think there's a lot of debate going on in the world because, they can't really put a framework around it. It's difficult to put a scorecard around impact investing today. So what impact investing is to somebody else, one person might be different than another person. For us, it's about enhancing the value of a whole business and running a business that you're actually proud of, right? But it has to go along with traditional capitalism and you're enhancing shareholder value to us. So, what we do at Green Coffee Company, and we're lucky enough to be in a business that it's, consumer driven or customer driven, is they want to know that you're running businesses the correct way. They want you to pay fair wages. They want things to be transparent. You can't operate in the shadows. You can't do crazy stuff, right? And so what we do, whether it's an environmental standard, and we try to use the best equipment that's available in the world to have, let's say, water safety or water control mechanisms on our processing facilities, do fair value of labor contracts, really pay real wages, pay pensions, pay benefits. In the end, I think it goes into run businesses that we're proud of that can be around for 100 years, and then use the best information and technology around you to build the most powerful business around you and take care of the society around you. Don't extract and do silly things that you shouldn't be doing, right?
Right. Yeah. It's really a good point about sustainability and making sure that you're impacting the community that you're in, you're paying people well enough for them to live. You're looking at kind of long term. I think a lot of companies, especially in third world or other sort of developing nations, haven't had a great reputation of that, where they'll come in and just take stuff and do things however they do it. But you really become a part of the community, especially if you do it the right way, and they will fight for you. And I've seen that actually. There's an example of a hotel in Belize that I've spent some time with, and they've really done a nice job of really, building community and really helping people and in different ways. I was going to ask you, Cole, what are some things outside of coffee that you find interesting now personally, or that you invest in personally? Sure.
So I'm at one of the companies right now. Actually, this is a company we seed funded in 2019, my partner and myself, called Polygonus. They're a digital arts and entertainment company. So they make, basically, it's a fancy way of saying they make video games, right? But the most exciting part of their business is they run an academy that teaches kids how to work in the video game business. So we're one of the largest players in that educational space here in Colombia. So maybe I get to spend 5-10% of my time with these guys. My partner and I, fund them with our own personal capital. We don't take outside capital for it, but they're always doing something really cool. They're always like, if I had to figure out how to make video games, I'd be dead by the time I'd figure out, how to make one video game. And so it's a skill set, and, you work with a lot of really talented people that are completely outside myself and my partner's skill set. And it's awesome. It's awesome. We love spending our time over here. And of course, I get to record from their studios here, and the quality is great. So.
Yeah, that's awesome. No, it's amazing now. Although I think during COVID, it's funny, I used to do a lot of calls with high net worth investors over Zoom, and half of them didn't know how to use Zoom, whatever. Now everybody knows how to, everybody's grandma knows how to use Zoom, because it's like,
that's right.
But now it's become, you can literally be anywhere and do this, which is really a benefit of, if you're in this space, you can be present even if you're not, in the room there. That's pretty great. Well, I just want to say, Cole, you've obviously had some incredible experience, both in the coffee space as well as the educational space you're working in there, and video games and other things you're doing. And it's great to see all those things have really collided for you, and just been able to enable you to create great value for investors. So, encourage people to be able to reach out to you. What's a great way for people to connect with you if they have questions and they want to learn more about the coffee business?
Sure. So you could check out our website at www.legacy-group.co, or you can check us out on LinkedIn. We'll be the only legacy group operating out of Medellin, Colombia. Should be easy for us to find.
That's awesome. Well, Cole, thanks for being with us today. Really appreciate you. Appreciate all the value you brought today. And thanks so much for taking the time.
Thank you, Bronson.
Okay, great conversation. You can tell Cole just has a ton of experience in the space. And when I say the space, not just the coffee space, but if you see, he's doing stuff in video games, and he's done stuff with mergers and acquisitions with banks and insurance companies and all kinds of things. And that really is a skill set. And I think it's something that you as a passive investor can just kind of like, well, that's not me. I haven't done that, or I've had a business, or I'm a doctor, or I do something else. But really the benefit is if you can learn how the numbers work and you can learn how things make sense, then you start to see the deals that pop off the page. And one of the ways you can do that is just every deal you hear about, you can have maybe an hour a week where you just look at those and you take 10 minutes and you analyze each deal and just see, hey, does this deal, is it really compelling? Does it really make sense? And also not just from the numbers, but from the team and the macro, right? I talk about three things. Whenever you're buying, if you look at an area where the market looks good, so that's kind of the top of the funnel. Then once the market, like for example, in Jacksonville, Florida, that's where we buy a lot of our properties. That market is incredible, right? 1,500 new people moving there every month, landlord friendly, business friendly. It has, there's just so many benefits I get down to, but you can do that in the coffee business too. Or what about the coffee industry? How's that going? What are some pros and cons there? And then you look at the operator, you learn what's their experience? What have they done? What are the things that they're trying to do? And, is it something you can see this could be successful just based on their experience? Then you look at the deal and you say, okay, what are the numbers from the deal? Based on the market and the operator as well. So hope you enjoyed this episode. I really enjoyed it. I'm actually looking into coffee and other sorts of things like timber and all kinds of different stuff, because there's a time when every type of investment makes sense. And the more you invest into learning and your own education, really you'll make more money. I mean, that's what Brian Tracy said. If you want to earn more, you have to learn more. It's not just a cliche term, it's really true. And I've watched that. So anyway, hope you enjoyed this. Please take a comment below, share this with a friend. I know somebody would really value hearing about coffee investing in Colombia. I actually want to get down there at some point. I have some friends in Medellin, so I'd love to get down there and see Cole down there. But we'll look forward to seeing you on the next episode of Mailbox Money.
You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.